All right, what's going on, everybody? Welcome back to a very special episode of the Roundup edition of Forward Guidance, and it's a special edition because we've also tied in here the Macro Dirt Pod boys. Super excited to have Tony Knife Catching Greer on the show, as well as Jared Dollar Bear Dillian as well, and of course Quinn. What's going on, guys? This is going to be a super fun collab show. I'm excited.
What's going on? We touched 40 VIX this morning. There's a couple of things going on. The market's shit in the bed. Tariff wars in full effect. Where do we start, man?
So much stuff. I do got to say before we get into it, I did have to rep my Oilers hat because I always love that you guys pull in the sport references on your pod. So I just had to represent that.
Yeah.
Tony, you're a Rangers. What hockey club? Yeah, Rangers, right?
Yeah, New York Ranger fan.
Yeah,
that's my team now. I'm not as much of a diehard Yankee guy as I used to.
You're not an Islanders fan. You're not a Flid.
Fuck no, man. I was never an Islanders fan.
You're a Flid.
Jared, are you Hurricanes or what? You're in Carolina, right?
I could be. I'm not. I don't really pay attention to hockey.
JD wouldn't know a hockey game if he was sitting on the fucking blue line.
Yeah.
Fair enough. Well, as a Canadian, I can't even say that much about baseball, so that's why I'm just sitting in my home turf here. But yeah, man, super excited to get you guys on the show. Quinn, what's going on? How are you?
I'm good. This week is it's fun. It's fun. I feel like every 6 months when Trump is in a position of power, we get a golden opportunity to fade derangement syndrome. And I have been a bear since late December, and I feel like it's time to start using my this might be the bottom chip. So I'm getting excited.
I want to jump in on that. So I think this is the time to be closing out hedges, right? I think we're down to about that level. I think in about a week, it's going to be time to buy calls. So now's the time to be selling the puts that you're long, and next week start thinking about upside. We're pretty close. We're pretty close. And basically what's going on here, this is why I love the financial markets, because the markets cannot be bullied. They cannot be bought. The markets will bring any world leader to their knees. This is going to continue until Trump capitulates and removes the tariffs or removes some of the tariffs or something, and we get some kind of relief. But literally the pain is going to continue until he does that. And I think we're pretty close. I
kind of disagree that it's going to be a tariff removal. I think that he is going to be pushing pro-growth policies and things like that out the wazoo as part, as the next sort of leg of his, America First plan. And I think that stuff eventually takes hold in the economy. Where the markets go, I don't know, and I'm not going to claim to know. But that's what I think. I don't think that this tariff story is going to go away. I do get a sense, though, and there's finally some chatter about it today on X, that there's what do you guys think about the conspiracy theory that this pullback and high volatility moment via the tariff war was created to get bond yields down 100 bips?
I think look, I mean, Besson is one of the smartest guys in the world.
In the room, yeah.
Like, I think there is a possibility that was the design the entire time. You know what I mean?
Non-zero possibility, right? That they talked about this, yeah.
Get 10s down to 3.5%, get 10s down to 3%, roll over the debt, refinance, I sort of believe that. So
yeah, I think it's a bold strategy, but it's also playing with fire because you're towing the line between where we're at right now and this, taking it reflexively lower. And so I think it's a decent proposition. I think the issue is that, you say that Besson's in the room there. I don't know if he's as much in the room as many of us would like, as opposed to some of the other folks talking about tariffs there. So I think it's a decent proposition, but it's playing with fire. So we're just going to have to see how it pans out. I'm more in the line of, if you just get non-inflationary growth, I think that's a lot more of an effective way to get the 10-year lower versus just trying to, cut growth here and nuke equity markets.
Rather than lop $5 trillion off the equity market.
So I'm non-consensus in like this whole atmosphere. One, I think Trump listens to Besant more than anybody gives credit for. If you listen to what Besant says and then connect the implications, it's been word for word. The only way Trump became this bond market guy instead of a stock market guy for the last 2 months is because Besant laid out the plan coming into this is me.
That's fair.
Portraying. Besant said, Trump, we're trading at a 22x forward P, all-time highs, all-time highs, bigger than 21. You're walking into a disaster. We have to do this, this, and the other to get it down. He went and cut 2 deals with the Saudi. They announced 2 separate production hikes, which is the most bullish thing no one's talking about of the week, in my opinion. Powell sitting there and saying, we got to wait and see. Oil's down 20% in 2 months. Inflation swaps are in the gutter. Like, we don't have to wait and see about anything. And the labor market unemployment rate ticked up to 4.2. Their end of year is like 4.3 or whatever. This is playbook, textbook. Like, if you listen to Besant's old interviews, these are all the things, in my opinion, he's been looking to do. And to me, to get all this done with just a 12 to 15% equity market correction, and most of that in Mag 7, I think they'll take that all day long. And I think here is where they pivot to tax cuts, deregulation. You have May, pull forward the May Fed, and they're making a lot of ground on. Besant said in his interview they're almost done with like their first proposal of the tax stuff. So I'm getting, for the first time in 3 months, like pretty bold.
Yeah, man. Think about it. The stock market is recoverable. The refinancing is not. So that's kind of the one thing that leads me to believe that maybe there's truth to that. And I'm kind of, Quinn, I'm kind of like on your exact idea that Besant is the architect of this, and he's basically got Trump like a marionette. Stand up there like a doofus with the fucking trade signs, and that, you know what I mean? Like, don't worry about it. We'll get rates down. Believe me. You want to see a crisis of confidence? Put this sign up.
Yeah. I was a huge Trump's going to win and markets are going to love it bull in September, October, November, and then turned bearish in December because of the reaction. And then all the people who were anti-Trump in that turned like, oh my God, we're going to go to the moon. And for the last 2 months, they still kept that and said, he's not going to do it. He's not going to do it. And he had to go in classic negotiating fashion. You have to go that last to break people's, okay, he actually is crazy. He might do it. He might, and now people are scared shitless, capitulation galore. Everyone's going nuts. And he did it. And now he can back off is what I think.
Yeah. So I'm with you guys. And I just want to game out the proposition of how do they off ramp this and get underneath this? Because Jared, I want to tease it out with you here, because you've been on point with this idea of dollar lower, bonds up, equities lower for the last little while. And it's interesting today that this is one of the first days that I've seen in a little bit where we have dollar higher, equities lower, bonds rallying as well. So, it feels like recently it's been a lot of capital coming out of U.S. markets, but now to see the Dixie rally today in the face of that, how are you thinking about that dynamic there?
Yeah, actually, I think the timing to close that out is pretty good. That idea, I was, watching the price action this morning, as the S&P was making lower lows, the bonds were not making higher highs, and the dollar was rallying. So I think, look, I'm a dollar bear for the long term. I think the dollar is going to go down for 3 to 5 years. I think it's going to be much like it was in the mid 2000s. But having said that, this first leg of it, the first 8 or 9% in the dollar, like I think you can, put a cherry on top. That trade's pretty much over at this point. So,
yeah, where does that lead you in terms of? Because to me, there's also been that other side of the trade, which is getting into rest of world equity like Europe and China and everything. We're seeing those get clobbered today. Is it just margin calls across the board, or is that the beginnings of the capitulation of that side of the trade as well? And where does that lead?
No, I think it's margin calls across the board. I still believe, in the long term, international outperforms US. I think, 3 months ago, we reached peak bull sentiment in US assets over international assets. So I'm still bullish international for the long term. What I'm really focused on today is commodities. Like you've seen, I mean, just a 2-day massive drop in the commodity index. I mean, copper was down like 40 cents this morning. Like Quinn said, oil is down 20%. These moves to me seem way overdone, like way overdone. And having said that, what's interesting is that if you look at a chart of the BCOM, it put in a 13 sell, right? Like literally the day before the collapse in DeMark. Like if you were paying attention, you would have caught that. So this is, I think the commodity correction is way overdone. So
is this something, Jared, is this something you look at oil and you're like, Jesus, 2 -8 candles on crude back to back. I start bidding here, or do you wait a week and see how kind of things shake out?
Oil generally doesn't look like over the last 8 months. If you look at a chart of WTI or if you look at a chart of XLE, and you've had these big gaps down on OPEC increases, right? Like generally when that happens, the market doesn't reflexively bounce. Like it kind of consolidates and then it kind of crawls higher, but you don't get like reversals in oil. So it's going to take a while to undo the technical damage. It's going to take a couple of weeks. So
yeah, you just look at the oil chart and it's 60. We haven't hit that since I think April 2021. That's a pretty sizable break, and it takes some time. Tony, how are you thinking about oil here?
I'm really not. I'm not interested. I'm looking at it as something that is a speedometer on some of my equity trades kind of thing. I do believe that if I'm going to be buying anything, that I'm going to be buying natural resources stocks rather than like piling into tech. Like it feels like that shift is happening where, I'm just looking for the best performers from here, and I'm not really oil. Oil likes these prices. It's in danger of breaking down. Like I really don't have an opinion on it. I think for me, the low hanging fruit is, finding some of these sectors that have been beaten into support and have a chance to turn and rally. Like I'm focusing on home builders today, right? Like everything is getting shit canned again. And all of a sudden there's 3 Sigma rallies in NVR and DR Horton. Pulte Homes and Lennar are up 4% a piece. ITB has got a 2.5% rally. Like to me, that's a trend changer there. Like these types of moves. And when builders change trend, they keep trending. So that's like one of the trades that is my trader gut is zeroing in on. That's really it, Felix. Like I don't have the gumption to keep buying commodities when they get beaten back to the middle of the range to try to fight all the traffic to try to get them up to the top of the range when I don't even think they have a snowball's chance in hell of breaking out. And I also think that yesterday price action in gold was very, very toppy to me. And that, I don't mean to steal the floor, but that just came along with something where like one of my morning newsletters that I quite enjoy reading about the equity market literally came out with, here's your starter pack for investing in gold. You know what I mean? And I'm like, okay, it's front page, guys. I'm sorry. It's 3,100 and it's front page because they just gave me how to look at gold futures handbook. So I made a big sale there yesterday. I'm kind of hanging my hat on that as being one of the only smart things I've done this week. And I'm in the weeds looking for the other trades. And sorry to have verbal diarrhea there for a minute.
You'll get a kick out of this. Similar vibes on gold. And one of my buddies who I was talking about the potential gold short setup with this last few weeks, he goes, just an FYI, my girlfriend's student from her class, 10 years old, came in and said he's bought gold.
This is the stuff that I'm talking about.
So I mean, gold has actually acted pretty well in this. It's acted pretty well in this crisis, but silver is down like $6.
Dude,
that's where the degents who like want to play levered gold hide out, thinking it's the same trade. When
they either do the miners or the silver play and just get destroyed. Like those are the 2 worst money making trades I could think of.
I'll die on that
when
hill.
You're losing.
Right with you guys, man. Silver is the sucker bet of the fucking commodity market. I don't care what anybody says. Because they're all hopped up on there's really no London silver and JP Morgan has a huge naked short. It's like, Do me a favor with that story. That story's going to get you killed. It's been going around for 30 years.
Quinn, can you catch us up on, so literally as we hit record, Powell was still talking, and I know Jared and Tony didn't get a chance to get up to speed on it, but I think you were looking at it. So what was your takeaways there? It sounded like, off the cuff, there was a couple potentially dovish moments in terms of anticipating some form of pivot. But then pretty quickly, he was talking about just waiting for more clarity, this dynamic of higher inflation, lower growth. We don't know what the fuck to do, so we're just going to sit on our hands. Yeah, what was your read on that?
Yeah, it was pretty neutral. I mean, it's tough to take anything too away. He did stress they're patient and they don't feel they need to be in a hurry. I think the good things for bulls was that he said, we believe we're moderately restrictive and have plenty of room to react. He noted the growth dampening expectations of a big trade war. And he, kind of, I think, alluded roughly to transitory inflation from big tariffs still being the base case, but need to protect against it, something worse developing. And he said, we have, another 6 or so weeks until our next meeting. And we're going to take those weeks to determine what the effects of this policy are, but it's just too soon to comment given how much is in flux. So I sort of he wasn't dovish, but I don't think you can really take away that he's bringing the hammer hawk either, because they are worried about growth and the soft data, and you just need time for some of these things. And, I think a thing against bulls here is, remember in August of last year, he pivoted hard, right? He said, definitively, we have left the hiking cycle. We are entering the cutting cycle. The markets were pricing in 50 or 100 in the next 4 months.
That's because he didn't want to get Trump elected.
Well, but what more? Yeah, that's true. But then we still had but what I'm saying, the implication for risk is we still had the double bottom in risk assets in early September, 2 weeks after that really significant pivot, which I was surprised we retested those lows. So, that's not in the bulls camp, I would say, in terms of getting nuts long here.
I get a push notification from Bloomberg saying we're pricing in intermediate rate cuts at this point. And someone else texted me and said there's a lot of chatter on these group chats about intermediate rate cuts. I don't think that's going to happen. I mean, you'd have to get the S&P to 10% lower before they consider doing something like that. So
I think that statement knocks it 10% lower. If they did an emergency rate cut today, I think the S&P would go 4,700 offered on the spot, on the headline.
Yeah, I'm in that camp. I feel like we've already lost the window of the proactive, getting underneath things and rate cuts being bullish thing. I think we've missed that window now. Jared, so to your point about, with VIX at 40, it's a good time to close out your puts. I'm totally with you there. And you mentioned this idea that, next week will be the time to sell, to start to buy calls. Do you see that as a bear market rally to be sold, or something that's durable? And do you think the Fed needs to play ball for that rally to be durable?
The S&P is highly mean reverting, right? So when you say durable, you could retrace 60, 70, even 80% of the move. We are going to reach capitulation and there's going to be an impulsive buy, and you could get the S&P back up to, I don't even know, whatever. I don't even remember
5,800,
what the
6K.
5,800, yeah.
5,800 it can go to and still be in a downtrend.
Yep. So
that's 600 points from here.
Yeah, it could happen.
It's an unbelievable trade if you can get your hands on it.
Yeah.
I think you start legging in now, because the earnings, although they're
40 VIX, you fucking definitely start legging in now, man.
You gotta. But the thing in the back of my mind is the December 2018 analog, which is, we kind of did this dance for a couple weeks where, it was a couple months sell off, much slower. There was a couple 10% bounces in equities, but Powell kind of played we're patient until, if you remember, things just fell off until I think it was Christmas Eve 2018, when he finally said, okay, we're responding to the market, we hear it, and stocks were down 20% at that point. So yeah, it's
at that point, I totally agree. The moment he pivoted is when Qs hit down 20% bear market, which is where we are this morning. But he's not pivoting right now. So then it's like, is it just the off ramp is from the fiscal side, from Trump and Besant, et cetera?
I don't think that Powell holds the answer in when the equity market turns.
Yeah. Okay.
You know, I think this is a pure market dynamic. You know, like we won't have found the bottom till we find it. Every man fucking for himself. And, you know, we won't know until the bottom happens. You know, like we haven't gotten any capitulation at all. You know, like even today, like I wanted to be on Jared's team where we can rally it all the way back from one of these huge magnitude slides, but everything intraday made lower highs, except the stuff that's rallying the home builders. And it's like, oh, fuck, this is going to be a low and last Friday because you can't hold the bag over the weekend with this stuff too, is just my idea. So who the fuck knows?
Okay, so we also had a couple economic data points that came out today, mostly the jobs report. What was your guys' take there? It seemed like, you know, it was a hot NFP. Go ahead, Jared.
I was actually a little surprised we didn't get more of a sell-off in bonds. You know, non-farm payrolls came in, I think it was 226 or 228 or something like that. The revisions were lower, but not a lot lower. Like the data was pretty good, you know, and you had like a little bit of a reflexive sell-off in bonds, and they kind of came back and they sold off a little more. But I think the market is so panicked about tariffs that the good data like didn't even help, you know, like that's my interpretation of it. So,
and even the unemployment rate, you know, unrounded was actually only like, you know, it was like it went from 4.13 to 4.152, just enough to make the rounded number go from 4.1 to 4.2. So even in that, you know, circumstance, the one bad data point was really just like a 1 basis point move.
Yeah. Non-farm payrolls is not going to stop anybody from shitting their pants.
Yeah, especially that number.
Just not. We're in price action rules, right?
I totally agree.
You know, we're at what price forces what to happen. You know, we're at the pressure point moments. You know what I mean? Like as soon as the fucking path of least resistance is up, it's going to be offerless for a week. You know what I mean? Like it's just one of those things. And then we're going to get to the level that Jared just mentioned. Like Felix, I think that's a great question to ask after this breakdown is like, okay, you say you buy the dip here or you're flat. What are you doing on a bounce? Are you selling the bounce or are you saying the coast is clear? I'm back in.
Let me jump in here.
Jump in. I want to hear what you have to say.
So it's kind of hard to imagine a big rally at this point. We've been getting killed for so long. October of 2022, right? S&P was down 25% from the highs. I think it was October 12th. We had CPI that came in a little bit better, right? After a year of being worried about inflation. Do you remember how much the S&P was up that day? 5.5%.
Was it?
5.5% up in a day. Like that is the type of bounce that we could get.
Yeah.
You know?
Yeah.
But to that point, you know, a 5% bounce, that just tells me, you know, the order books are light and this is just a bear market bounce. If you told me it was like multiple days of 2%, I'd be like, okay, that's a durable rally. But if it's a 5%er, that's something I want to be selling into.
Well, that was the lows in 2022. That was the ding dong lows, you know.
Playing devil's advocate, and Tony, I agree with you that an NFP print from a month sale data when the whole reason the market's selling off is forward-looking implications of what people deem as a madman in charge. Fading ourselves, just devil's advocate, like theoretically, if the market wants certainty and clarity, we did get it in terms of like worse, like I guess the China retaliation, there's fears that he comes back but I mean, if tariffs are already 50%, what's he going to, I mean, there's got to be some presumable limit to the upside. So like we did get clarity this week. We did get some level of clarity, and you have to imagine, at least from a volatility standpoint, which to your point on these bounces and these bear market rallies that can be vicious, a lot of those are probably just quant algo where the VIX crushes from 40 to 20 and all these machines got to just start bidding this SPX. So sometimes you just don't know what that thing is going to be that kicks it off. And it's usually at times where we're all sitting here saying, I can't imagine what bullish thing could turn this around.
No, it's true that we are at that point where there's no confidence in latching on to a rally yet. You just haven't been rewarded in weeks for, buying that turn, and every turn has been met with more selling. And so, I mean, it's definitely selling that I underestimated. I didn't think we were going to make a new low after the March 11th low. And then we got into this debacle. And, I'm to go back to that original thought is I think you have to owe it to yourself as a trader, given the charts and the magnitudes of the breakdown, to sell the rally, whether you're selling it short or something like that. Like that's where, I mean, I feel like that's where the next lobster bib trade is. It's like, oh boy, we just retraced all the way back up to 200-day moving average in the S&P. First time, this is a fucking sale. That's what I think. And I will definitely tee that trade up unless there's something completely absurd going on where it's like one of those all the way back through the moving averages to recover trend rippers. I don't think that we're going to have that this time around, though.
Yeah, Tony, to your point, when you came on the show with us a few weeks ago, we were chopping up about being the hero and saying, you got to buy the 200 moving average. You just got to and try. But, as a trader, I'd just love to hear, like, how do you manage that risk of it being invalidated? Is it just tight stops? Is it low position size? Like, how did you mechanically deal with that?
Yeah, it's called giving money back, which is always difficult to do. But the thing that I pride myself on is that I am not a bag holder. You know what I mean? Like the risk parameters that go on the trade when you put it on are the ones that stay on through thick and thin and through no matter what noise or narrative happens, right? That's the risk reward parameter. That's what you stick to. And that's how I got out of the S&P trade before this happened. I got out of broker dealers before today, and I got out of those by having good entry points. I got out of those with like a 1 or 2% loss. Like I was in the money from buying the dip for quite a while, and then I kept moving my stop up and they got elected on the way down. But that's the way that I survived this, is as soon as you get a chance, bring your stop to break even. Don't lose the money. Right. And things like that are really important to, managing your bankroll. And, if you've gotten blown up before, that's the whole game, especially in times like this. Like this is the blackjack table is firing and there's a lot of money going back and forth and you can go broke in two hands. So it's that matter of like always knowing that you got to live to trade another day and say, yeah, I'll take a 2% loss in this because that makes sense, before it gets to 7% and 10% I don't have. So that's the only way for me to manage this stuff. And it's just getting out and losing the money.
Yeah, I like that a lot. I think it's important to know where your edges are in terms of navigating that risk management. Because I'm on the same boat. Like, I feel like one of my strengths as a trader is my ability to just take a small loss and move on and not let it hurt me, because that's where those things accelerate. And, sometimes other people have different heuristics.
Yeah. In this market, I gave buying, I gave buying the lower open one shot. And when you don't even get to, like when you put that trade on, what it feels like when it works. It's like, oh, okay, we just recovered yesterday's low. Okay, we just went positive on the day and there is no pause. Look at this, we're up 1% and this thing is swimming higher, right? And you have to feel the absence of that when you try to buy the turn and you're like, okay, are we going to recover yesterday's low right now? Oh shit, we just failed it. Oh man, here comes another slide of selling. It's like, dude, that's the sign right there. You got it wrong. Because what it feels like when this thing starts galloping back, and this is not it.
And I think so much about just from experience, but the reason that's so important is getting out before you're squealing like a pig. Getting out and respecting your stops is because sometimes you might be a day early, or you might be 4 hours early. You might be, because the most violence happens at the end of the moves. It's same with shorting tops. It's the same with buying dips, where you're like, I think we're here. And then you get the big capitulation. We're back at you puked. You got so flustered. And we're actually a day later back at where you puked, and things are up and you can't change your bias quick enough. So that, like, whether it's scaling in, scaling out, respecting your stops, and in terms of invalidation, I find so important to not get left at the last train stop when you maybe were directionally or correct in the broader region, but timing wrong.
Yeah. It's important, that those 2%ers can get big if you don't also like have the egg timer on them as well, which is like another facet of risk management for me, is that once they start getting stale and they're not doing what you expect them to do, you have to recognize the absence of that and know that it's time to get out. That's all. What do you guys think about? I want to ask a question here. What do you guys think about miners? Do you think that gold miners are going to hang in there and continue to be the best performing sector of the S&P? You know, currently up 25% on the year, with gold up 15% on the year. My next best performer is TLT, the bond ETF. Silver's up 3%. Consumer staples are up 1%. The BCom's flat on the year, and everything else is down.
You know, 25 years ago, the gold miners were actually negatively correlated to the stock market. Like, I actually did a study on this when I was in business school. I don't know if you remember this gold miner, Placer Dome. You remember that one, PDG? Yeah. Mm-hmm. Yeah. It was like negative 0.2 correlated to the stock market. All the gold miners were. So when GDX was actually up yesterday in a down tape, I was like, huh. That's interesting. I wonder if that's coming back. So,
and they rallied back hard, JD. Did you see where they opened?
Yeah.
Yeah, they opened down a couple of percent and rifled back to unchanged while they were selling stocks and selling gold.
Yeah, I mean,
that's relative performance.
Oil price down 20% helps those guys.
Yeah.
I mean, as long as gold doesn't completely shit the bed, their revenues are still high. I do like the broader base metals play, looping like copper and other things into that. It's could be though 2 to 6 months early. I'm not sure, but I do think that's coming at some. I just think the lack of investment into that part of the market is so profound.
Yeah, I'm with you, Ken. I'd much prefer being in those more degen metals and miners. I think one of my few holy rules I have is to never touch miners, just because it's just a brutal, trade. Like,
good rule.
But to your point, like, is never touch natural gas. That's
another good one. That is another very important rule to have. but look, I mean, it's because commodities are so mean reverting, right? So you have the gold surge, and then all the miners get hot and bothered because now their margins are a lot better when gold is above 3,000. And then if you have gold topping out here, like we're talking about, it makes sense for that to be the final blow off for miners. And then as, if we get sub 3,000, I think, that's going to start to squeeze the more unprofitable miners. So it's just something I don't touch, but it is a good indicator to look at for sure.
Yeah. It's just, I mean, I'm in the game of always wanting to be in that winning sector at the end of the year. And that's the game that I play and I've gotten better at. And sometimes you can make it happen. And it's like, this is really tempting to buy any dip you can find in gold miners right now, just because their relative strength is unbelievable versus the rest of the world. So I'm trying to figure it out myself. I have no risk on, put it that way. No risk on right now.
Yeah. Fair enough. Okay, I want to circle back on this discussion we had at the start of the show about this, idea of either a growth scare or recession to get yields lower to then refinance and that off ramp. So obviously part of this dynamic is trying to understand how much of these tariffs need to be permanent to raise, revenue for the government to offset the tax cuts that are potentially coming, and how much of it is, part of this game to have the big board up there. What's up, Jared?
First of all, so we're learning more about the tax cuts. I read a couple things last night. So there's been a couple of things that have come out about taxes out of the government. And Lutnick 2 or 3 weeks ago said that the goal was to eliminate income taxes on people making under $150,000, which is 93% of taxpayers. And yesterday we found out that they're thinking of raising the top rate to 40% on people making over $1 million. So this is a Republican administration that is making the tax code way more progressive than any Democrat would have done, which is not pro-growth. Like, there's been some talk about like pro-growth tax cuts on this show. This is not this is the opposite of pro-growth. This is a bag of shit. The tariffs and what they plan on doing with taxes is a complete bag of shit. And if they came out and said today that they were lowering marginal rates across the board, they were broadening the tax base, then I think maybe you'd get more of a bid out of stocks. But this is terrible. So,
yeah, I think the focus for them is on the corporate side and incentivizing. It seems to me just all about this kind of manufacturing industrial revolution they want to back here. But yeah, it just makes like, even in this bounce that we all think will come eventually, it's like, what do you play? That's kind of what I'm thinking about now, which is like, is it NASDAQ because they've gotten hit the hardest? But it doesn't seem like policy is that conducive, because Jared, to your point on taxes, like it's just not a bullish development to take money. There's the chart going around of bottom 50% own 2% of assets, top 1%.
By the way,
160.
here's the interesting thing. If you eliminate taxes on people making $150,000, that costs $600 billion, which is the exact amount that they want to raise from tariffs.
Yeah.
Huh. So the reason I asked that is we're already starting to get a few different reactions from different countries to these tariff announcements. We've had the China side of things, which you already mentioned, Quinn, which is retaliation. And then we've also had the Vietnam side of things, which is, okay, we're going to cut our tariffs down from 20%, I believe, to 5%. But if you look at the terms of trade between there, obviously a lot more is on the China side than the Vietnamese side. So do they try to get a few wins from that at this point where you got the 10-year below, at a 3 handle? Is that enough of an off ramp to be able to just take those wins and say, look at everything we did. We managed to get to that X number that they need to cover that tax obligation that they need. And then we move forward from there.
I don't know what the off ramp is. I don't like, it's kind of like, when I say I'll write in my newsletter, I'll be like, all right, XYZ is going to go up. So inevitably some ding dong says, what is the catalyst? Right. I'm like, I don't know what the fucking catalyst is. I have no idea. I'm just reading the charts. Right. Like I'm like the sentiment guy. Like I'm reading like human emotions. Right. So all of, everything I've said so far is about like, look, having lived through a bunch of cycles and a bunch of crises and stuff like that. And we are close to the point of maximum pain. So when you say, what is the off ramp, like whether it's Trump backpedaling on tariffs or Powell cutting rates or whatever, I have no idea. I really don't know,
Fair.
Yeah, I like that approach.
I think in these situations, that's all you can, the approach you can take, where it's like, okay, I know they're trying to get yields down, but I don't think they're going to let the stock market go minus 30, and it's like, where am I okay kind of easing in? Because when you do start predicting and forecasting as if that's what's got to happen is where you sort of get in trouble. So,
okay, Jared, as the sentiment guy, I want to get your read on Bitcoin holding up pretty good here. If you told me that Qs was down 20% and that Bitcoin was at 83,000, I would be shocked. Do you feel like that's, complacency there? Is it just, decoupling? How do you read that?
That's a tough one. I don't think it's complacency. I can tell you that I've been, in the newsletter, I've been noodling around with a place to buy Bitcoin. I thought that 80,000 I was looking for 70,000. I was looking for 70,000 as a place to get involved. Maybe crypto people are kind of taking a longer view, I don't really know. I can't explain it. Maybe Tony knows.
I do not know, but what seems amazing to me is that the corporate inflows at every price level and direction are astounding. I just, there's been like no puking of inflows, like even on the days that it was down big, it was like the net, it was like, like negative, like $100 million worth of outflow from the ETF. So like when I just see that, I feel like it's holding up. I don't have a really good answer for why it's going anywhere, but I feel like it's holding up because the institutions are saying, okay, like we're a buyer of this thing. We're a buyer on the dip and we believe in it. That's like the only narrative that I can come up with, because I like you guys, I'm kind of amazed at how strong it is. I thought it was going to go a lot lower to the downside, and the thing is just kind of coiling up like it's going to move 50% quickly at some point. And I would imagine it's to the upside if it hasn't broken down to the levels that we were looking for. I mean,
it's a scary proposition. It's one of these where you're looking at it, you're like, God, that's going to break, isn't it? God, and you're like, okay, it's not. Do I step in? And right when you step in, bam, you get smoked. But to your point, I mean, the thing I think about is Sailor, between these corporates, you guys may be following it a bit less, but obviously MicroStrategy is one of the largest buyers of Bitcoin consistently. They've just continued to see retail prop the stock up. But then GameStop, which is fairly large, multi-billion-dollar buys, and a couple other crypto native companies like these miners are now doing it too. So to me, I'm looking at it's like, is it that, these corporates kind of just TWAPing in, but eventually that sort of dries up, you have to imagine. So if the S&P bottoms within a day or two, I think it keeps this outperformance, but it feels to me like if this broader risk meltdown drags too far too long, it's eventually got to puke, I think.
Yeah, it's one of those things where I'm like, is it just as obvious as, GameStop and MicroStrategy are bidding it up and holding it up here? And as soon as if GameStop got filled on their offering a week ago, they've been TWAPing this whole week. That's going to end pretty soon. And as soon as that ends, do we just drop out? Or is it, if you look at how Bitcoin trades through a lot of these moments, it's a lot of that, oh my God, it looks like it should go to 70. And it just keeps either doing like a little, swing failure pattern and then reverting into that range, and then never quite gets that resolution that we're all looking for. So it's a hard one. I'm 50-50 on it.
Yeah, man. If you take a step back and just look at the chart from 30,000 feet up, it made a double top at 110K, pulled back into the 200-day, and looks like it's about to go again. But like that, if I had a read on it, and especially since, the NASDAQ cannot catch a bid for 2 weeks, and this thing 83K, right? Like shocking, man. Shocking. So yeah, it's supposed to be a levered bet on, US risk assets, a levered bet on the NASDAQ. I mean, it's just decoupling from everything. It's not even trading opposite the dollar. Like, I don't know what it is anymore.
Did you just ring the bell, Jared?
Ranger goal.
There it is. Tony Greer just said we entered the banana zone and we're going to 200K next week. You heard it here first.
Right.
But that is the title
Hold
of the
on
pod.
to your crypto, mate. Hold on to your crypto. We're in the banana zone. I'm one, by the way, that is like, I don't know when, but I'm almost expecting Sailor to get carried out on this trade somehow. Like, I don't know how somebody survives this. I've never seen.
It's inevitable. It's inevitable.
It is, right? Like you don't get to pull off hubris like that and just blindly get away with it. So
you would think,
and it may go on a lot longer than anybody expects, but it's a matter of time. I just hope I live to see it.
All right, guys. Any other markets we missed before we wrap up here?
The one thing I'll say on interest rates that I think is, I like I said at the beginning, I think Besant is the guy to look to, and I think that his goals are the ones that need to be accomplished. Yesterday I was a little, why I wasn't very excited yesterday was because the 30-year barely moved. So we had like all the front end of the curve, rate cut expectations, obviously, but then further out, it was like, ooh, that's not great, because if they come around and pivot, we're going to just see September redux where the long end goes. And so to me, it was like, maybe we're not there at more pain. It's finally getting dinged today. Second straight day of gold down over 2%. So starting to become a little more interesting. But to me, that's that bond market signal that I've been finding.
Man, I feel like the bond market hasn't been sending any signals at all, except for that flight to safety rally yesterday.
Yeah.
Man. I mean, it may be me too. I don't know if I'm looking in the right places, but I haven't been getting clues. The bond market actually tripped me up by having absolutely no reaction for starters to the equity sell-off. And I was like, dude, curve's solid as a rock. Fucking bonds aren't moving. This sell-off is a buy. And got myself caught there because I would have thought that there would have been some tremor in the bond markets and stuff. But so I've been, the only thing that I can hang my hat on is the head and shoulders in the 10-year note and in 10-year yields. That's pretty obvious with the breaking of the neckline at 410, which looks like it leads to 360. So
yeah, it's a tough one because I feel like the upside for bonds here means you need to open up the window towards recession pricing, I think, to get any further upside in bonds. And so then you pair, when I saw Powell saying we're going to hold the line some more, that to me is a signal to potentially get more excited for bonds, because if he was to really start to get dovish here, I think that would be, to Quinn's point, a bit more of a signal towards a September repeat. But for him to hold the line here, perhaps that's opening up the window a little bit more for some upside.
Could be. I agree though that you do need to see more economic weakness for this thing to really carry on.
Who's got the best weekend plans? Jared, you DJing anywhere?
Oh no. What am I doing? Actually, I'm DJing in Vegas on May 30th at the MGM Grand, and I gotta do a little prep. I'll probably be doing that this weekend. So, yeah.
If you want some feedback, send it our way.
Yeah.
Tony, you getting your dog walks in?
Yeah, man, that's about it. I do a quarterly report for a group of my clients, and I got a little bit of ahead of it into yesterday. And then when yesterday happened, I crumpled it up and threw it in the garbage pail. And so that's what I'll be doing this weekend is redoing the quarterly report. But thank God I didn't publish the one that I was about to publish. Just waited to see what Liberation Thursday was going to be. And what that told me was that I had wasted my time with the first report. So that's what I'm doing.
Sometimes I just publish stale shit. Like you just got to eat the shit sandwich. Like it's too late to rewrite it. You just send it out stale. Like,
I couldn't do it. I didn't have the heart, JD. Like I you know what I mean? Cause I would have been knowingly doing that.
Yeah.
And I wouldn't have slept at night. I was like, in my heart, that was not the right thing to do. And
you're doing it quarterly here, which is, you got to kind of.
Yeah. It's kind of, you want to take a step back and not rush it out, like this. It's been very useful. The reason that I do it is that I tried stopping it, and the people in the group that get it are like, hey, where's the fucking quarterly? And I didn't think that people were reading it, but it turns out if you lay out an entire framework and it's at least accountable, whereas there's no like brain farts in it, like you can't say that and that, as long as you do that, people really appreciate that.
Yeah.
They really appreciate just somebody saying, okay, here's a framework or what I think it can happen. So I continued doing it and just trying to do it accountably.
Yeah. I mean, that's what's so key. Like, I appreciate all three of you for the, willingness to have a little bit of these masochistic tendencies of eating these shit sandwiches. Cause I think it's so important to be intellectually honest, to eat those shit sandwiches sometimes.
It is, man. If you can't do it, if you can't do that, you can't be a trader. That's it.
No. Exactly.
Those are the rules.
Yeah. Sick. Well, it was really great to get you guys on here for the collab. Really enjoyed it.
Yeah, we'll do it again, man. Felix and Quinn will get you guys on the macro dirt just to make sure we do some reciprocal marketing, et cetera, et cetera. That'd be great.
We'll negotiate a deal.
Yeah, exactly.
No tariffs.
Yeah. No shit. Just don't hold up a sign like a playlist. Right.
Love it.
All right, guys. Have a good weekend.
Have a good weekend, guys.
Great job, man. Have a good one.